3rd of March 2023, Friday. Thank God it's Friday, and welcome back for MAO with Kel once again. Now today, as lots of information going on, we have the Wall Street never play fair, guys. Never. Okay, I'll tell you why I say so. And of course, Credit Suisse is in hot soup right now. Really, guys, things is really mounting up. And of course, we have another one company, is Blackrock. They're also in trouble now. And apparently, we have Bitcoin and cryptocurrency all coming down at the same time. All this information I'll share with you very shortly. And of course, a little joke to share with you too. All right. Before that, let's go into this disclaimer. Make sure that you do your risk assessment. And thank you, AIMS, for the kind sponsorship. Alright, let's look about my Hang Seng once again. Right, this is my Hang Seng indicator that a lot of people are using right now. And you can see that this morning, Hang Seng gap up. Right, this morning, Hang Seng gap up right here. Beautiful, it gap up all the way. And then what happened? My indicator says that, you know what? If it cannot stay above the opening price, we will have the sell signal here. So what happened? We decided to give a sell because we believe that Hang Seng usually will cover gap. And the cover gap, it will be somewhere around this area, right? Okay, so what happened? The thing is this, we shorted the market, and of course, we were rewarded. You can see the market came down all the way, and we profited from there. Again, this is again amazing, right? But the more important thing is this, when the market came down to this area here, can you see the bomb here right now here? Yep, indeed. So what we believe that if the market cannot go down further, it will usually do a reversal. And of course, you can see over here, it really happened, and we have people actually noticing that. And of course, the market really rebound from the KTR -3 level that is actually mentioned here. All right, congratulations to those who have profited the market and continue to make money with Hang Seng. All right. Alright, so let's just talk about a joke here. Apparently, we know US is a freedom of speech, right? Okay, I was just doing some what do you call, research. Then I come to this particular tagline, Biden destroy America. So I just take a look at it, right? Be a capo, right? Then I was so shocked with some of the articles. I need to share this with you. Take a look, son. Under the Democrats, Ukraine got $200 billion. The Congress get a 41% pay raise, and Taliban get 85 billion. Iran 200 billion down. All these numbers I cannot be sure, but I think 200 billion is quite fair. I think I saw it before. The rest I can't be sure. Yeah, but we all know that now in America the eggs cost $7, gas is $4, and of course a lot of crack pipes going on, and really things getting crazy. And who knows, we may have this actually. So this is where the freedom of speech, right? They can say anything they want. Take a look at this one here. This one shows that basically the people who claim Donald Trump will crash the economy and start World War III have crashed the economy and started World War III. That was a good one. All right. And of course, one more is the comparison between Biden and Donald Trump, and really undeniable. This is really incredible. All right. So all I can say is maybe, right? This is the view of the Americans right now. That's why probably we understand why less than 40% of Democrats are not very favorable more than 60% of people in America, Democrats are not very happy with Biden right now. Interesting. Anyway, just for a joke. All right, let's recap about what happened last night. Okay, the Dow Jones recovered strongly, 341 points. Wow, okay, that's something beyond what I expected. Nasdaq recovered 100 points, and S&P up by 30 points. Okay, so you look across the board. Okay, we have Microsoft doing okay. We have Nvidia recovering, but Apple was not even up at all, okay? And in fact, across the board, right, I mean, other than it was more the Dow component stock that's going up. Google was up a bit, Meta a little bit, but Tesla was down by 5%. That is interesting. And Tesla is back down below $200. Now, I've been saying this once again and again. I said that anything above 210 for Tesla, just sell, just sell, just sell. And of course, people getting not very impressed with the investor day. That's the reason why. And of course, there's more people looking towards is at what this Tesla is going to come out with. And I think Elon Musk just refused to talk about that little topic, and that basically make people not happy. Right, so the Dow Jones actually recovered because Fed Bostic spurred the rally. The thing is this, I'll tell you more about this guy very shortly, but that is the reason, okay? And of course, you can see that the traders try to shake off the concern right now because this Raphael Bostic came in and said he firmly in favor in sticking with the quarter point hike. But do understand this, Bostic is not one of the Fed officials that will be giving his vote, all right, he's for next year. So I mean that whatever he say right now got no impact to the current team. So the market just basically pick it up from there and do what they want to do, which is to pump up the market. So you see that the market was sideways for quite a few hours, and then after that, when Bostic came in and started to talk about his view, and he actually says that, you know, let's just look at 25 basis points, okay, not 50, and we should look at it, maybe we should do a bit lesser, you know. When he said that, immediately Wall Street picked it up, and that's where the market shot up, okay. That is where I say that why market can be manipulated, all right, very, very clear. But more important thing is this, why I say it's not fair, right? At the same time itself, right, you can see the data. The data are showing that the manufacturing PMI has went down, but the crazy part is that the jobless claim actually went down too. That means that lesser people are actually getting jobless. This is not a good sign. I mean, put it this way. Yes, the economy is doing good. It's very hot right now, but you don't feel so? You think so? I don't know. The earnings and the numbers just doesn't feel right. Something is just wrong in the whole thing. It's like someone has basically played on the figures and make sure that numbers just look good, okay? So the best part of this thing is that at the same time, apparently, this guy, Fed Waller, came in and said that if the data stay hot, policy rate should go above 5.1 to 5.4%. And more important thing is that Waller is actually one of the guys who can or will be voting in the next FOMC. They are the only, FOMC got 19 officials, but not everybody get to vote, okay? So they rotate among each other. So the thing is this, Waller, who can vote, and he actually said the same, he said his part during the same timing, but Wall Street just refused to talk about it at all. Alright, it's just a little article, but it concentrated on Bostic and make it so loud and as if that, you know, he's right. So that's why I say Wall Street is a very, very dirty place. Really. They will just want to do what I want to share to you, and then they just elaborate on that. Now, why am I so unhappy? Because Bostic actually, I was just doing my research yesterday, Bostic actually says that he wanted a higher rate. Let me show you the video right now.
Atlanta Fed President Raphael Bostic out with an essay this morning noting the need to raise the Fed's policy rate to a range of 5% to 5.25% and hold it there until well into 2024. Bostic's reasoning is the Fed must, quote, determine when inflation is irrevocably moving lower, but it has yet to reach that point. We've also got comments out from Minneapolis.
So you remember that? But this is an article yesterday. I mean, that means that this video was yesterday's video, okay? So he actually, the day before, I mean, that means that he actually says that there is a need to higher it, right? But then again, if you look at it right now, he flipped his view. He actually flipped his view. And now he says that maybe we should just lower it down. Let me just bring you the article in. You can read for yourself. This is really incredible. So actually, Bostic now says that, okay, if the data is going to be like too hot, I mean, the data is not, it's just okay. Yeah, he's actually looking at only a 25, a quarter basis point. Okay. All right. So that's the thing here. I mean, this is really incredible. Then one day he's calling for a rate hike, and the next moment he said that, oh, let's go to 25, okay? So of course trying to, like, you know, through the thing, say, okay, let me be clear here. There may be a need, but you know, it's tight. And the best part is this, he actually mentioned that if things are okay, who knows, we may have to consider a rate cut instead. It's not directly saying that, but just in a way trying to say it right now. So I can tell you this, guys, this is crazy. One moment is this, one moment is that. Okay, he flipped so much, right? So just wondering itself, right, did Wall Street pay something? Okay, anyway, that is Bostic, right? So now you can see, right, the 2-year yield itself is incredible, and the technical of it, the mechanical of it is ridiculous. Look at it. This is really an incredible extension where the market just, if you draw the two lines, you just draw it up and then you extend. Look at the way it stopped. It's so clear that someone is holding the ship. And of course, if you look at it from the bottom, oh my God, look at the way it stopped there. Oh shit, this is incredible. So all I can say is, guys, this is really, really incredible. This is really pure mechanical. And all I can say is we are going to go to the 5% mark. Okay, pretty clear. It's undeniable. So the question is why the Fed officials are still having different views. I just cannot understand. So we have another interview on Hightower on CNBC, and they are actually summarizing pretty well regarding about the current situation right now. Let's bring them in. Okay, let's watch them. Let's go.
Conversation about where this market could be heading. Stephanie Link, a CNBC contributor, of course, also of Hightower, and Dan Greenhouse of Solus. asset management. It's good to have you both with us. So, Steph, I said, coming in today, critical levels, 200-day moving average on the S&P, got a little bit of a move higher here as we begin the final stretch, but also that 10-year above 4%. And then you have the overlay of the technicians and what they're watching and the real critical levels to suggest whether we really are going to have more downside or not.
Yeah, I mean, I think today we have a little bit of Dan Loeb effect, right? Because he is very bright and he has a great track record. And for him to get aggressive on a name that he sees there's a lot of opportunity, especially in the second half, especially after NVIDIA, and we're going to talk about semis later. But I think that's a vote of confidence that there are places in the market that you can invest in. It's not overall the broader market, right, that you want to be invested in this year. You want to be a stock picker. And you mentioned that the market is expensive at about 18 times forward, but there's so many stocks out there, Scott, that are not that expensive. In the meantime, the broader averages, I think, were in a trading range. We've talked about this endlessly, and I thought it was sort of interesting today that everyone now expects, after the unit labor cost number came out and inflation continues to be persistent, everyone's talking about, okay, more rate hikes this year, and then all of a sudden more rate cuts next year. They're nowhere close to cutting. That's not even in the vicinity of their thinking at this point.
Yeah, that's for sure.
We are all data dependent, and the inflation numbers, no matter which numbers you're looking at, CPI, PPI, core PCE, services ex housing, it's still too high and too hot. And so that's why you're going to continue to have the Fed being very hawkish. And so I think it's very premature to start thinking about and starting to bet on a Fed reversing next year.
Right, I totally agree with her. Seriously, I mean, kind of, guys, look at it. How can the Fed actually cut rate right now if all the numbers are at a high level? So if you understand this, guys, right, the thing is this, the interest rate factor now is really going up, okay? And people are getting the pinch, the feel, and the punch. And now the problem is this, if there's still room for further upside, you can imagine now the earnings will definitely come down, and unemployment will have to creep up because why? The companies will not be able to continue, and they will cut and cut and cut. And when these people get out from their jobs and they can't find a new job in the market, then what will happen? The entire GDP will drop, okay? And then all this happen itself, yes, people will not be able to buy, the inflation by itself may come down, but, at this point itself, right, think about this. If let's say people living out, and then what happened? There's no people doing other stuff. There might be a sudden spike in inflation again, because that is the aftermath of it, and this can get really, really out of hand. And I think you guys in Singapore, you can feel right now, right, things are really going up, prices are going up, and everybody just increasing prices just because they feel like doing it right now. And of course, you can see that it's all happening across the board. So that is the reason why, even though last night we have the Dow Jones up by 300 points, you can notice that the fear and greed index didn't really move. In fact, from the extreme greed back then, 76, it moved back down to 49. That's why the market came off. I've been telling you guys this, watch this very closely whenever it goes above 75. And you can see right now, right, in the number, you can see the chart shows very clear that we are back down to this point. Of course, this is where it gets interesting because this is like the pivot point. If the market stays above it, usually there'll be some more bullish, but if the market stays below it, there'll be some selling. So my question is that, are we going to see some selling soon? Well, it is possible because the market is just not buying it. And of course, you look at the summary right now, the put and call ratio is 1.13. The index put and call ratio is 1.24. That is high on the sell side. And very important, the equity put and call ratio is 0.97. Okay, do note, just yesterday was at 0.49. So again, things are moving, even though the stock market is bullish right now by buying up, but I feel that something is just not correct. And of course, if you look at this, this is a CFO forecast versus the Dow Jones. Let's take a look right here. Now you can see that right back then, the CEO was asked about the business condition, and the worst was back in July month, which you saw it right here, July month, okay. But do note, yes, indeed, it looks right because the market really, really fell all the way until July. But the thing is this, after that, you can see the market recover, and of course it went up. When the market came crashing down back in October, you can see that the market business forecast was not there at all, right? So it's not a very direct thingy, but of course recently it picks up again and you have the market all pushing up. So the only thing is this, on the contrary side, okay, playing the devil advocate, we have the numbers going up right here. I mean, the forecast feels that it's getting better, but the stock market is not really following through. So again, in my view is this, right, you have to watch out for the 50% Fibonacci level, because that's 32,827. We saw the market really come down and touches it and recover. So by right, if the market recover upwards again, it may go back to 33,806. But on the contrary, if the market breaks down, then it is very possible to see the market coming back down to 31,000. So we're going to watch this very, very closely, guys. Okay. Now, according to JP Morgan Trading Desk, they warned that 3,900 is a very critical level, and that is a level that Mike Wilson mentioned, right? And they say that if the S&P loses 3,900, there will be a heavy selling. And of course, there's some resistance right now at 4,100, and that's what most people are trying to sell at over there. So if you look at it right now, right, it shows that the S&P index and their model is showing very clear that there is a bit of decoupling, and of course things can get very serious. And from here itself, right, they're looking at if the S&P can go back to 4,001, it'll be the best. If not, right, watch out for 3,009. Things can get really ugly. All right, this is from JP Morgan Desk, which is seemingly quite the same with this Morgan Stanley. Yep. Alright, now guys, remember this. Just 3 weeks ago, I was telling people about Blackstone, okay? Now, a lot of people have been asking, hey, Kel, you cover things that people don't talk about it. Then they realize that after a while later, it actually comes on the surface. They say, how do they get this information? Now, I'll tell you guys seriously, I get this information because I read a lot every single day, and I get the latest update, and I also watch a lot of YouTubers, and these guys are really good with the news. They will sniff out the best, and for me, I just have to listen to them and talk about, I think about it. So what is good, what is bad, what can I share, what I can't share, right? Because some of them, they be biased on certain areas, so I try to avoid that. So when I see something good, right, and I know that it will actually be picked up later, I share this with you. So 3 weeks ago, I tell you guys, watch Blackstone, and I mentioned to you guys, things can get very ugly. And now, this morning, Blackstone just defaulted a $562 million US bond. All right, again, this is not a good sign, because if you are a big company, why would you default? Because probably you're utilizing money for something else, but apparently it's not working out fine. And this company, it's like $1 billion to $1 trillion company. This is not a good sign at all. And we've seen this before, right, back in Lehman Brothers' time. So Blackstone Incorporation defaulted a 531 million euro bond backed by the portfolio of Finnish offices and stores, because interest rate is hitting the European property value. So think about this right now. If the Federal Reserve says that there's more room to go, and if they increase interest rate further, then of course company like this who are suffering right now, what will happen to them? It's a no-brainer. It's really a repeat of potential Lehman Brothers. And of course, right, you can see right now in US, the valuation has declined very severely, and of course, more and more companies are not able to pay off their so-called bonds. And if this is going to happen, there's going to be a spiral effect. It's going to hit everybody down. So now the thing is this, okay? All I can say is that now this is really like a Lehman, and of course like China in Evergrande, you can see that it also happened again. So this is going to be bad, guys. This is going to be really bad. Now remember, I talked about Bitcoin, and I told you guys yesterday during the technical side, I said be very careful. If Bitcoin breaks 23,000, it will drop to 21,000 rather easily. So what happened is because of Silvergate. Now Silvergate has a fallout, and Silvergate actually now is having a bit of trouble because their share price died 40%, okay? Because the bank actually faced a financial crisis. Now take note, Silvergate is a California bank, okay, that deals with cryptocurrency operation. So thing is this, if you deal with it, right, I mean, buy sell got nothing to do with you. Why would you be having trouble? Of course, you can argue maybe the volume has gone down, but I think that's more than meets the eye. And of course, you look at it right now, this is actually the Bitcoin chart. Now, Bitcoin has an uptrend recently since January, but you can see right now it has broken below the trend and it's coming down. 21,700 will be the first target for me. And then the next support with 28,650. And when this all breaks, hell will break, and we'll see 17,000 again. Guys, this is no joke. This is no joke, okay? I've been telling you guys this, be very careful. I said the volume is coming down. It doesn't look like a uptrend market, so that's why yesterday I warned you guys quite a few times, right? And of course, the thing is this. Let me just bring it in. All right, let's look at Credit Suisse right now. Credit Suisse, the share price has hit low yesterday, a couple of days ago. Yes, it's hit a couple of days ago. In fact, yesterday. In fact, sorry, my bad. This is actually the minute chart. Yesterday, this Credit Suisse went down to $2.70 before it closed at $2.79. And since just a couple of days ago was at $3, is now down all the way, guys. This is really, really bad, okay? And I seriously believe that Credit Suisse will go down further, okay? Because you can see right now, the Swiss National Bank usage of the Fed USD swap line has gone up all the way so high. You know that mean they are borrowing a lot of money from the Federal Reserve. Now think about this, guys. If they borrow so much money, they must return with interest, obviously. This is not going to help. And even if the thing is this, that's only if, let's say, Federal Reserve continue to help. But one day Fed say, you know what, I have enough, I cannot send any more money, or I think that you may default, right? Oh my God, what do you think will happen? This is crazy. Because now Credit Suisse saw their historic level of clients pulling their funds away. Look at it, the amount is really, really big. This is like the biggest ever since 2013. So all I can say is that this bank is going to go bankrupt, if you ask me. So they need a lot of help, and hopefully they get fired. If not, right, this can be the next black swan and things can get very, very ugly, okay? Alright, let's go to the technical side. I'll see you there next video. This is Kel signing off for this one.